Let's take a look at the transportation stocks with the rails really in focus here. Jeffrey Small is with us, president of Arbor Financial. So what's the big picture here? I mean, the rails did particularly well. I saw a lot of 52-week highs, but there's some stiff competition when it comes to freight and trucking and rails. What's going on here? Your picture.
Well, the rails are a great way to transport goods, and so we now know that goods are still at post-pandemic levels, double what they were pre-pandemic levels, so the rail business is going to be good. But, you know, the rails don't yield very much, and some of them have taken a beating. So investors want to get into rails that truly are growing well, that have the best numbers and the best forecast going forward. And in a rising economy, we're going to see the rails do okay, even though they have underperformed the Russell and the S&P the last couple of years.
So if they've underperformed the S&P, I mean, you know, there's always the talk that technology can replace a lot of things, but it cannot replace what the rails do, right?
No, it really can't replace what the rails do. I mean, but 72% of all goods and services of all goods transported come from the trucking industry. The majority of the rest comes from rail. And there really was no excess capacity in rails, especially with the supply chain shortages we have now. You know, when coal started to become the demise of the energy sector, less coal was being transported, so that produced some excess capacity. But to be honest with you, we need more capacity across the board in every transportation sector. We are under capacity right now.
Right. So, I mean, tell me about being underinvested in capacity and what we need to do more of. Explain that to me. I mean, what's the big concept here, since you have mostly truckers really moving most of the stuff?
Well, they both have expanded, but nobody could have expanded to the point of the demand that we have today for transportation. We've added 35,000 truckers in the last 2 years since COVID. And so, you know, the rail industry is also expanding as well, but there's only so much we can do. We can't build tracks that fast. We can't build trucks or roads that fast. We really have to slow down the pace of consumption. And even by the Fed's revised statement, you know, we've got 3.5% GDP growth this year. That's almost double what it's normally been historically.
So at this point now, what do you tell a regular person as I see that CSX train go by? You know, the transports are made up, right, of the Dow Jones Transportation Average is 20 names. It is the truckers, the shippers, the airlines. We look at these rails. These are what I think of as the transports. You tell me if I'm missing something. Which ones are the winners? What would you pick? Where would you lean?
Great question. So the fastest growing railroad stocks, and I'm glad you asked me that, are Canadian National Railway, CSX, and Trinity Industries. Those are the fastest growing railroad stocks. So if an investor wants to start investing and they want to have a little bit of that in their portfolio, that's the direction they should go there. Railroad stocks with also lots of momentum in their business lines in this kind of economic environment, a Greenbrier, symbol is GBX, Union Pacific, CSX, of course, which I've mentioned. And so those would be my picks in that sector at this time.
Yeah, and you know, and I don't even know, you mentioned Trinity and GVX. I mean, those aren't ones that I know as well, only because maybe they're smaller or they do something different. I mean, you know, Canadian National, obviously one we talked a lot about, CSX, a big one as well, and some of the others that we often follow. But some of these smaller names, I guess they must be smaller. Those are names that you came up with. Why is that? Why did you pick those names over the usuals, right? Norfolk Southern,
specifically, Trinity Industries provides transportation products and services in North America and offers lots of rail car leasing. And there's going to be a lot of demand for that as we're looking to transport more goods than we've ever transported before. And so they're in line for probably good growth at this point.
Ah, interesting. Very interesting. So as we go forward here and we're moving into summer and there's a lot of worries about an economic change, a slowdown, less demand, there's always fuel costs. Weather could be an issue as well. Any thoughts on some of these maybe headwinds?
So far, I will just say this, and not to you, but to the pundits in the inflationary land of slowdowns and recessions, it's the economy, dummy. The economy's on fire. We have the highest PCE in 40 years. And you're not the dummy. Just in general, a lot of the pundits are, not you. But you know, we had the highest PCE in 40 years at 5.4% a week ago, 2 weeks ago. And we haven't had, let's say, any demand destruction. People are spending money like crazy. So until the Fed makes a massive move in rates, this thing is out of control.
I like how you changed stupid to dummy, and you said multiple times that it wasn't directed at me, and I thank you for that. Because you're right. I mean, I like to be more. Thank you, as are you, Jeffrey, and that's why it's our pleasure to have you on the network. And honestly, some of those questions I formulated from reading analyst notes. So I think you're right. I think people are a little worried about a lot of things. Jeffrey Small, always nice to have you on the show.
Thank you
very, very much.